Hi, this is Randy Finney with the Right Side of the Chart, and this is an early session update for Wednesday, October 22nd, 2025. It is 10:10 a.m. Eastern Time as I'm starting the video, so we're 40 minutes into the trading day, and just want to take a look at some of the core things I'm watching, the things that I think have the best either our potential risk reward ratios or active trading opportunities. So that'll include the metals. We'll get to metals miners. Start out with the equity markets, and because it is we are heading into peak earnings week, I'm going to do what I like to do is go over who's reporting that day or upcoming and give you my 2 cents on where it's going to go based on the charts. I believe I did that recently with Netflix and some others, and we'll do that again here today. So, all right, starting out with QQQ, nothing's changed, and as I mentioned in yesterday's video, we're still below the recent highs, which keeps this is a 60-minute chart, so you don't see the bearish engulfing here. It's on the daily and weekly charts. Those are still intact. And as I said, due to we've got, by the way, not just the earnings, we have the Fed coming up too. And that usually happens on peak earnings week. So you've got, all the most of the Mag 7, Mag 8, and 10, whatever you want to call them, stocks, are ones that move the market reporting this week and next. Tesla's tonight. I'll get to that in a second. And that's it. So therefore, from my experience, they're not going to take, the core shorts that I have. I give you an objective add-on re-entry on VIX today. And basically, I'll just kind of keep stops, positions not too crazy. It's not an all-in aggressive long or short moment, in my opinion, whatever direction you want to, if you're trading the markets, that is. There's plenty of individual stocks. I've been covering that for months, and we've been doing vastly outperforming the stock market on individual stock picks, long or short, the most bearish bullish stocks. And, while the market grinds around, that's going to be your better of the two strategies. And remember, what's happened in the NASDAQ was mostly attributed to those big tech stocks and not throughout the rest of the market. It's been a very bifurcated market with, plenty of stocks in bear markets, bear trends, plenty in bull markets, bull trends. And so again, it's been a stock pickers market. All right, that's it. So QQQ, not much to update. I mean, like I said, if they want to pop it, fine. I'm going to give it a little room over the next week. From my experience, there's very little chance of the market exploding higher, barring some crazy unforeseen catalyst. But with the Fed on deck and all the earnings and plus the blackout on a lot of the government reports, I think same thing I maintained a few weeks ago when I told you I thought the RR was phenomenal on the VIX, very attractive, and we got a quick 25 to 35%, depending if you're trading futures or VXY, pop up into those initial targets. And now we're back there. So I'm going to say what I said 2 weeks ago, 3 weeks ago, that I think the RR, the risk reward ratio, the amount of loss potential versus upside gain, is once again very attractive on the VIX. It wasn't so much last week when we were, up already, rallying into our early targets. Now in this pullback it is. So let me move on. Let me get to the rest of the indexes. So there's QQQ. For futures traders, the NASDAQ 100, what I did, I penned out, remember back here I had it as S1 for support and then resistance, and we kept going through it each time a little higher. So you have this near-term, the makings of a near-term uptrend. So we've crossed through there so much that it makes that level not as significant to me. Again, it's still there. I have the line there, but what I've been maintaining since we put in those bearish engulfing candles in nearly every day since. This is the next big level. So I color coded it blue, pretty much a break of Friday's lows. Friday's from before last Friday, whatever that date was, the October 10th, was it? Yeah, the 10th. All right, and that's it. And again, expect noise, volatility. I'm going to I'll leave that line there. I'm going to add one here, short-term level that may come into play. I can see that we had a reaction high here and broke above it, and we've been back testing it. So that's a little level there. That's what my 60-minute chart of NQ looks like. And just to reiterate, the sell signals that we got on the wedge breakdowns, that was the 60-minute. That was the get-in sell signal right there. And then on the daily and weekly charts, we printed those bearish engulfings, which are still very much intact. All right, I commented quite a bit on those yesterday, so let me move on. And SPY, the S&P 500, still very much, well, not very much, but still below the previous highs. And those sell signals are intact too. And let me give you ES 60-minute chart for you futures traders, because I've told you we're starting to see some wobbling and sell signals in the financial sector. Therefore, you should have, it would be not unusual and fairly likely to see the S&P 500 maybe go neck to neck or close to what the NASDAQ falls if we do get another leg down. Again, because the S&P 500 has a very large weighting in financials. And same thing, this is Friday's low. And so there was our sell signal, very clear bearish rising wedge breakdown on the 60-minute chart at ES. Sorry, guys, I had the chart scrunched out. Let me try to grab the top. There it is. So ES, the S&P 500 future, little small divergent high there. And I already had this level here for you right there. So this should do the trick. There was an all-time high, breakout to all-time highs, failed with the got short right there on the breakdown of the sell signal break of the wedge, and then it was it shows you that was a very significant level. We didn't just kind of hiccup down or slow drop. We fell hard, came back up. Anyways, that's a level that's been tested quite a bit. We're back above it now. So in a perfect world for the bulls, the S&P 500 should hold this level, go on to new highs, and if it's really bullish, it wants to go on and take out all these divergences. But any new high anytime soon, as I bring my divergence lines across, will still be a divergent high. Again, assuming it's a marginal, meaning relatively slightly higher high. All right, so that doesn't change the technicals, and being, again, as I said yesterday, with it being earnings season, this is where if they can get up here and pop it, they're going to suck in some new money, new bulls, buying the breakout to new highs, shake out a few shorts. And so, again, like I said, you do you, I'll do me. From experience, there's going to be some noise probably between now and next Friday. Again, we've got, Fed meetings coming up. We've got all the big fangs, some market moving stocks reporting, and it can go either way. But like I said, I think based on the technicals, the upside's most likely limited. And anything more than that, then yeah, maybe that blow-off top scenario that some are looking for will come into play. Alrighty, let's move on to the smallies. Yeah, small caps, IWM. Still very much below its primary uptrend line. This is the daily chart. This is the primary uptrend line off the April lows right there, with our recent sell signal there, back test, rejection, back test number 2, rejection, still below it. And as I told you, change that to a stop based on a weekly close, and we'll see. But as of now, the sell signal is still very much intact. We have these 3 what I call typical swing trade targets for a typical swing trader, and then longer term traders can view my weekly chart, which I've covered many times, but get newbies on the site every now and then. I'll let you know this is a big potential triple top in the NASDAQ 100, massive multi-year trading range right there to get the measured target of a triple top pattern, if that's what that proves to be. In other words, if we get rejected here, we already have the sell signal to highs, the divergences, everything I'd like to see. So I have a pretty high degree of confidence it'll play out, whether we have a marginal fake out move or not. Next step is the bottom, and then this line here, the widest part of that pattern here, the base of the pattern, you add that, and that gives you the measured target of the triple top pattern, which comes down to my minimum long-term target. I believe I already had that there from a while back, and this is my maximum long-term target zone. Pretty aggressive stuff if it's hit. And if we're going to the moon and back, then we break out of here. Ideally, you'd want to see these divergences get taken out with, moving back over those previous highs. As of now, this is our divergence. And that's it. So again, that's long-term stuff, long-term targets. Shorter term is the daily chart. And like I said, sell signals are still intact. Okay, on to the metals. I'll give you quite a few updates yesterday. We hit a lot of the targets. It was good for a bounce. I'm trade futures and the ETFs, GDX as ETF for the miners. You can just keep it simple there. You can use the leverage ones when volatility spikes. Just remember that those are best if held for any period of time in what I call a unidirectional trend. Now, we're probably going to get that. Like I said, there's a bubble has popped, and we'll see if this is just a pullback. But what I wanted to highlight for you is gold is now below that level, the primary uptrend line, and there's that high level bearish PPO crossover. Again, you look at the PPO line. This is your PPO line, the blue line. White's your signal line. I look for these high level bearish PPO crossovers. The last one we had was right here. You don't get them often. They're good when you're trending, like going up. You ignore PPO crossovers there, plus when it's not high level. Anything near the zero line is low level. So you get a high level one, and that was a sell signal that lasted for months with a double-digit drop there. This was not very high level, but we were trending, and it did work as a sell signal. And then this one's very high level, coming off extreme overbought readings. And again, as I said, one of the most crowded trades in history. And so I've said this day in, day out, that, I've trading for a long, long time. Parabolic trends never end very well. And that when they do reverse, they typically go down just as fast or faster than they came up. And so you can see here for silver, for example, my preferred trading proxy, is a drop of 12% in just a few days. And you can see it's wiped out everyone that's bought since going back for 14 days. 2 weeks. 2 weeks of gains wiped out in just a couple days. And I remember hearing last night, I think they said it was the biggest drop in a decade in gold. And I imagine something along the same lines on silver. As I already highlighted, we already had the bearish PPO crossover. So that the day we had the kickback rally, I got out there that morning, highlighted that little kickback rally as an objective add-on re-entry. And so very, very profitable trades here. And again, long-term sole swing target right now of T1. So we're only halfway there. And you can see on the 60-minute chart, we broke the trend line. So there was our initial sell signal in silver, the bearish rising wedge break. I highlighted to you on this kickback rally after we bounced off that 45.82 target as an objective reentry. I might have used futures, and this is it. So, if you game in it that way, you're actually able to do more than the actual drop by reversing. And that's where I've been trading ping pong off silver futures. As I mentioned yesterday, it was an objective level to go long. All had gold, GDX, platinum, palladium, all hitting price targets. And then you can see that was my bounce back target, filled overnight, reversed me back to short, woke up this morning, got to cover again, one more long, and now I'm back short again because we're below the trend line. It just sold right before this video, reversed back to short. We're below the trend lines on gold and silver and everything else. Okay, now of course, keep in mind as an active trader, I'm in out in my active trading account. Long-term accounts, yeah, we still have some pretty nice sell signals on gold, GDX. And remember, GDX should have vastly outperformed gold, because here's the way you got to look at it, guys. So we know, basically gold mining stocks, for the most part, pretty simple business model, right? They're all doing the same thing. They're all going into the earth, trying to extract those metals. And, they have energy as their second largest expense behind labor, just like the airlines. But then once they, their costs, again, freeze energy costs, freeze the labor costs. It's a fixed cost to pull an ounce of gold out of the ground, right? And so when gold goes up 30, 40%, it's just pure profit in their pockets. And same with silver and all that. However, it goes the other way too. Now imagine, so your miners have been rocketing up neck to neck, even higher, going up more than gold. And now the thing is, prices have been very high, and they've been pulling out, I'm sure, producing as much as they can to get it out at those prices. But it takes a while to get out of the ground. And once prices go down, I mean, that's what they have now. Now, if they're holding X amount of, ready to move to market or pull out, and I don't, I'm not an expert on the mining trade, but it's very simple. When the metal prices collapse, continue to fall, there's a tremendous amount of profit potential that was priced into these guys that won't be realized. How much of that gold and silver did they sell at the recent price? Now, this could be a little correction, a buying opportunity. I still have 2 more targets. We hit T1 yesterday, told you on the metals. GDX, I'm sorry, the miners. And we're just a hair above T1 now, but we're also a hair below that trend line on gold too. So if gold can take back the trend line, then hey, good. And it's 2 ways I look at it, guys. I look at it both. It's I have 3 time frames that trend line's on: the daily, 60-minute, and the weekly chart. This is a daily chart. Right now we're below it. So they tried earlier to get up above there, but we're still below it. So I'm watching that one very closely. We have the bearish PPO crossover, and yeah, I have these potential additional targets, which we might as well go ahead and make those official targets right now since we're below the trend line. So, all right, let's do that. And the day is very young. Let me repeat that again. The day is very young. We're not even an hour into the trading session, but I have a theory that the same folks that have been piling in to gold, silver, and GDX are the same folks that have been piling in NVIDIA and all the hot stocks du jour, and they're going to feel pain if and when the stock market goes down. And if gold goes down hard, gold and silver, then they get margin selling, and they also have to sell some of those tech stocks. So I guess that's pretty simple stuff, guys. Bearish and short, right? Again, this is swing stuff, and now both in active trading accounts, short the metals again, just bouncing off those little levels there on silver futures overnight. And that's it. So if gold can recover here, well, give me pause. Certainly won't want to be aggressively short, but as long as we're below that trend line, and that opens the door for a much bigger drop in gold. And again, you already have silver, the daily chart, sold target if you're trading the daily time frame. 60-minute chart, you have all the other little micro levels, I call them, for active traders. And there's a longer term uptrend line, which we're probably headed to. It's on silver at minimum, and that would be a drop of about 20%. And if it does, what's it going to do to the daily chart? You get down there, it's the same target. What'll it do to the weekly chart? And that's the thing. On the weekly chart, we already have that bearish engulfing. Today's Wednesday, early Wednesday, but as of now, big fat bearish engulfing candlestick on silver. And again, I've highlighted this. I know I'm being very repetitive, but I see the potential for big gains if this is a blow off top in silver. Because everybody that I could hear, 99% of the analysts were calling for much higher highs. All the reasons, these clowns come out of the woodwork here and here and here. Not here, not here, not here. We were long silver there. We were long silver and gold there. Big breakout, especially in gold, back when gold took out the 130 level right here. That was the massive breakout that I was looking for over a year. Started the bull trend, and now if you look at the weekly chart, we currently have a big fat bearish engulfing on the weekly chart. Again, week isn't over yet, but we'll watch this one. Okay, let's move on. PPLT, if you're trading platinum and palladium, you guys have targets there too. My targets, T1 already got hit, took out T2, potential T3, and PALL. I made sure to get all these out to you last week. I might have given that to you on the 60-minute chart. Yep, there it is, holding T1 right now. If and when T1 goes, and we'll go down to T2, 3, 4. So, VIX, talk the VIX, Mr. VIX. Here's the daily chart. I got this one out to you this morning. First, gave you that chart back here. Told you break out above the wedge. I'll give you 1, 2, 3, 4 targets. Each of those hit. Each of those with a reaction upon the initial tag. And now we pulled back to that 1720. As I said in that chart I initially gave you, that would be the initial buy point, break out of the wedge with an additional buy point. That was big resistance in my opinion. It was a key level. Had it on my chart for a while, and now we're back to it. So this is both an objective re-entry of anybody that took profits here or here, as well as a new entry if you didn't take profits. And again, it's about RR, guys. I may be wrong on this, and I don't give two flips. I know people jump over all over my market calls. Never hear anything else about any of the other stuff we're trading that with exit with enter at bottom, sell at the highs. but it's the market calls. God forbid one doesn't play out. But it's you keep taking shots, and it's about risk reward, profit potential. My upside targets. I have to zoom out here a little bit. I have higher upside targets. I think we'll take that level out ultimately, if I'm correct on my longer term market call. But again, it's about how much downside. So you enter here off the 17. We were below it in pre-market today. When I got that out to you, we were a little below it. I'm trying to measure. So you have about, to the downtrend line, about 11%. Up to this level here, 260% to that next, that's the next target there, 37.50. And then 60.14, talking about the ones that haven't been hit. And then, of course, you trade, I like futures, but I give you the VIXY for those of you that trade ETFs, ETNs, and that's it. So T1's been hit, pull back here, objective reentry. Now that T1's already been hit, it opens a way that if we go up there again, probably go through it, hit my second, third, fourth target. And again, I always say these targets, somewhere in here, I had a note before, but okay, the note's missing. Always align your entries and exits on any of these VIX ETNs, because they're plagued with decay and expenses and fees. They're trying to roll futures and make a profit, skimming off the management fees and all that stuff. So it's not going to track the VIX perfectly. And a good example is you see VIXY is at all-time lows, or coming off all-time lows, and the spot VIX is certainly not. The spot VIX, as I told you, has been making higher lows for over a year now, well over a year. All right, I just had a price alert go off on TLT. Let me check that, because I gave that a trade idea to you guys. Price alert, TLT. Let me click on the alert. Oh, there it is. There's that trend line. Let me tighten it up nice and clean. I gave this to you in the video the other day. No, we're right on it. I didn't have that trend line drifted a little. Sometimes that'll happen if I touch them in pre-market or whatever, and I have the white candles up. So we're right on the line right now. TLT breaks that line. Like I said, that would be an objective short entry. First target, TL means trend line. Then a second target, zone. Zone is when I have two support levels in close proximity. Make that a zone, and then T3 there. What else do I have for you? We know that Netflix is very key. This is went over, I believe, last week when I covered the ones that will be reporting, and said simple to me, when the daily chart is negative, the outlook is bearish, then that's usually the way it's going to go after earnings. Netflix, I just want to point this out, is at massive bull market. This is the primary bull market uptrend line off the 2022 lows. Key support, as well as you got it, those beloved 200-day moving averages that just do such a phenomenal job of defining trends. Bearish when you take them out. You've most likely started a bear or are in a bear market at that point. And once you recover them, like you did right here, it's simple. It's the easiest strategy in the world. And not every stock. Some stocks behave better than others. You buy pullbacks to them. So now, if and when the 200s go, also that primary uptrend line is going to go. That sell signals don't get much better than that, and especially the fact you're coming off a divergent high. So, and that's a good question. You didn't ask it, but I'm going to tell you. So when do you stop buying pullbacks to the 200? You stop buying when the charts start to indicate that the probably at or near the end of the run. Maybe it pumps up again. Maybe they buy it off here one more time. We put in a larger, extend the divergences. It's not going to change anything in the technicals. Or not. And if we break that level, we also break this 1164 support right here. So there's Netflix, post earnings drop, but again at really good support right now. So if you are bullish, and I know there's at least one of you out there thinking buy every dip, there it is. You want to buy Netflix, you can buy it now a whole lot cheaper than it was when it peaked back here a few months ago. You're down 16%. If you're bearish, just wait for those levels that I just showed you to get taken out, and the stock should drop. All right, let's look at the other stocks reporting tonight. Tesla, we'll start there. Obviously, a big one I highlighted recently. Tesla had put in that ascending broadening wedge pattern, a bearish engulfing candle, and divergence, by the way, to boot. So I really should be B, C, and DH plus DH, divergent high. So two different things, but the divergence is the negative divergence that forms the top of this ascending broadening wedge pattern right here. Is also known as a megaphone pattern. And there's your breakdown that I recently highlighted. We're still below it. There's your divergence, bearish PPO crossover. Key support right here at about a little below 416. I have it at about 415.90. And if that breaks, this is going to be your first support level and a very good one, this yellow uptrend line. Let's thicken that up. That's big support. So again, two ways to take this analysis if you agree with it. If you are bullish and you happen to get a post-earnings drop down to the trend line and you think, that's a buying up, then you buy it. It'd be a pretty good drop, but it's a nice, clean, beautiful uptrend line. However, if that trend line's taken out, then you can see my next support or slash targets, 361.55. Based on the fact that all this and the breakdown, we're still in the breakdown, that tells me this will be the likely outcome of Tesla, a drop after earnings. But we'll see. I'm not going to gamble that one. We'll just wait and see what happens. I've got shorts on the NASDAQ 100 that'll pan out and longs on the VIX if that's the case. All right, what's next? We have IBM next. Let's see. I want this. Oh, 1 second here. There it is. IBM. What do I see at IBM? All right, this is a daily chart. Okay, similar to Netflix, actually, or some of the other things I covered. You have a primary uptrend line. You have a stock that loves its 200-day moving averages. When you're in a sideways market, you'll go through moving averages. Don't use them. Ignore them. You're going to slice through them like they're not there. Ignore PPO, bearish and bullish crossovers. That's indecisiveness. That's EKG, sloppy. When you start trending, that's when things such as moving averages, trend lines, and all that stuff work. And so once it started, the stock broke out of that sloppy range. They bought every pullback to the 200s. That was a brief breach, and followed by recovery, which was bullish. And so that's it. Those are your key levels on IBM. You also have a very nice, well-defined uptrend line. I think I have an alert. If not, I'm going to set another one here. And that's it. We're coming off a big divergent high. So if I have to bet, betting man, I'm going to bet that one down after earnings tonight. Next up, QuantumScape. QS. Look at that. Look at that. That one just broke down. Breakdown's pre-earnings, but because they report tonight. But yeah, that's a nice, clean, bearish rising wedge. There's a breakdown. Big negative divergence. And it put in it's coming off a very bullish bottom. This was primary downtrend line right here. Breakout and a back test. Some back tests last for a while. That's why I always tell you the problem with going long a back test of a downtrend line or short a back test of an uptrend line is that it can happen for some time. And so we need to see it start moving away. And when it did, it was bullish. It started running up, put in another high there, and boom, bearish rising wedge. So not to sound repetitive, but when I look at this chart, I have to call that one down after earnings. First target, next support would be all the way down here to 948. That'd be a pretty hefty drop. If hit about a 33, would cut the stock down by a third. All right, we won't go through them all. These are always, when you use this earnings calendar, and again, you can access it on the site under resources and then tools of the trade. They're ranked typically by market importance, which is nice. You can sort them any way you want, I believe, but there's a sort button here somewhere. But all right, last one, Lam Research, big chip equipment maker, LRCX. It's a funky looking chart. I don't have much of an opinion on it. It broke trend line recently. Let me look at the weekly, see if I have a better read from the weekly chart. Broke that trend line, went in this area of consolidation right here. Very overbought, but that in itself is not a sell signal, but it tells you this thing's probably running out of gas. See back here, it splits. All my old lines are gone. What happens to this charting platform? When they catch up with the times, let me know. I love the charting platform. I use about 5 different charting platforms. The one's just easiest in videos. These lines are easy to move. But every time stock splits, they don't adjust for the all the lines get moved. They don't have any way to manually or automatically adjust. So you got to move back your trend lines. And you can see that's what I'm doing here. I'll continue that later. It just doesn't matter. These are old lines I had marked up. And that's it. So I don't really have an opinion on that one. I'm not going to call that one either way. Yeah, why don't we just wrap it up here? All right. You guys have the setups. You have my outlook. The money makers the last few days have been precious metals. The market could continue to grind around, but we're in earnings season, so if the trend starts to develop, whether it's the outlook, remember, it doesn't matter 2 flips what earnings they report. Almost all these companies, especially these big mega caps, the Mag 8s, they're multi-billion, even multi-trillion-dollar companies. They have perfected the art and science of guiding earnings and making sure, playing with their books, moving things forward and back, very easy. And so they're almost always going to report blowout record earnings. And they, don't get me wrong, they can miss. And if they do miss, and it's a big miss, every now and then you get one of those surprises. But what I'm trying to say is not about what they report, it's the market's reaction to it, and the market's reaction not just in the after-hour session, but in the following coming days to weeks. So, Netflix, even though it's not a Mag 10 or 8, whatever anymore, it's starting to, impact the markets today. We're down a little bit, and we got a lot more coming up, and you guys know my thoughts. Let me wrap it up here, get the video out to you, and I'll keep hunting for trade ideas. If I see anything new, I'll make a point to get it out to you ASAP. This has been Randy Finney with Right Side of the Chart. Have a great day.